What's up guys, welcome to my channel and this is Every J. Today I will talk about Opendoor and we'll also take a look at its charts as well. Unlike most people, I don't like to diversify my long-term holdings more than 3 to 4 companies. But after giving some thoughts, I have decided to add it in. Before explaining why I have decided to do so, let's watch a video first.
Guys, the news is that IPOB is merging with Opendoor, and Opendoor will be going public. This is the largest online consumer real estate business in the United States. It's doing something really incredible. And so what we did was we started to look across a whole bunch of industries, and one industry that jumped off the page was consumer real estate. Everything that could be bought and sold online has moved online, except that. And real estate is interesting because this is a category that touches every single American. This is the pillar of the American dream. 68% of Americans own a home. 32% probably want to at some point. 5 million homes are sold every year. This is the largest undisrupted market in the US. It's $1.6 trillion. But despite that, it's completely fragmented. It's low convenience. It's low trust. It's low NPS. And a third of the people in the marketplace actually only do it part-time. And so this is where we found Opendoor. And what they have done is something really incredible. And we think that they are building what we love to call a virtuous cycle. As a consumer, can now go to opendoor.com, and within 24 hours, they will give you an all-cash offer for your home. Because the more offers that they're able to make, the more homes that they will buy and sell, which means the more markets they'll dominate, which means the more value-added services that they can automate online, for example, mortgages, title, escrow, all these things where you used to have hundreds of pages of documents they can streamline through a mobile app. It also allows them to work with banking partners to secure large pools of capital at cheaper and cheaper rates. They can pass all these savings on to you, and all of that drives more demand to the business. There are 5 really important trends that I think people need to understand. The first is that coming out of the global financial crisis, we've seen a massive underbuilding of housing supply. This is creating large housing affordability issues in major cities, and people are moving. The second is that because of the tax situation in America, the federal government eliminating the state and local tax deduction, state budgets in peril, taxes are going up, people are moving. The third, because of coronavirus, you can now work from home. Many people can work from anywhere, so they are optimizing for quality of life and they're moving. The fourth, you have 75 million Americans, digitally native millennials, who want to do everything online. They're starting to have families, they're looking for homes, and now they're stepping into the housing market. And then fifth, and probably the biggest accelerant on all of this, is as of a few weeks ago, the Federal Reserve basically told us that they're going to keep interest rates effectively at zero for a very long time. And we think that's going to drive an enormous amount of home ownership and the velocity. So when you put these things together, there's a really important trend that's happening in America, which is that the huge populous states like New Jersey, New York, and California are stagnating and starting to lose people. And these younger, cheaper, more dynamic cities are gaining enormous share. And these are the markets where Opendoor has already launched and is achieving scale. They have 70% of the market, so these guys are the dominant leader, almost 4.5 times bigger than their next competitor. Last year alone, they did $4.7 billion of revenue. And 2023, these guys will do almost $10 billion of revenue.
Opendoor IPO'd June of last year through IPOB from Chamath. And as he explained, I also saw huge upside potential for the stock. And I have set my price target at around $150 within 2 to 3 years. It is just amazing that Opendoor can close a housing deal within 3 days. This is very convenient and stress-free because usually it would take few months to close a single deal. Also, additional cost of selling house such as seller fees, staging fees, and closing fees can be reduced by half. This can be very beneficial for sellers because these costs usually adds up more than 10% of the property value. For me, just these benefits alone seems to be very appealing. I would expect more and more sellers to start using their system, and as a butterfly effect, more buyers will be coming in as a new user of Opendoor in near future. Also, as mentioned on video by Chamath, US housing market is very active right now, and it will continue to grow and stay active for more years ahead. Some people will continue to stay at home for work, and it is highly likely that US will accept more immigrants in future to increase population. Closest competition to Opendoor is Zillow, which currently has double the market cap of Opendoor, but in 2019, Zillow's total revenue was just half of Opendoor. This shows that Opendoor has huge potential to grow, and current price of their share doesn't make sense to me. Of course, comparing market cap to the revenue does not correspond directly to price of each shares, but these numbers can give you a guideline. Lastly, Opendoor is growing in very fast pace in my opinion. The company was founded in 2014, which hasn't been too long at all, but it is already one of the dominating companies in the market. Even ARK Investments has been buying the stock for some time, and recently they have picked up heavy shares as well. Now, let's get into the chart. Okay, Opendoor. Opendoor has recently broke out. This 2-day movement was caused by Zillow's great earnings, and I'm expecting Opendoor to do pretty good as well. And currently it is uptrending with the support line right there. So you can think of this line as a pretty good time to buy whenever it hits this line. I initially entered the position within this range a few days ago because anything under $30 is good. And currently, right now, I'm looking at anything around $32 is pretty good too, as well. And it has also recently broke out of this panic right there, just like so. And I am expecting more parabolic movement. So whenever it dips, I would buy more into it. If you have not currently holding any shares of Open, I would enter right now, but not every share. Meaning that right now, just buy around 20 to 30% of the shares you want. And if it dips, add more shares into it so that you can average down. When it rises, just ride the wave with the 20% of the share you have. And then when it stops for consolidation, that's where you start to get in. And also MACD and RSI is looking quite nice right now. It's uptrending and it doesn't seem like it's overbought at all for me. So I expect more parabolic movement from now, unless market crashes, of course. And that is all, my friends. Thank you for watching. See you next time. Bye bye.